what people need is really a more of an in-depth review of what their overall risk could be going forwards, and especially in light of COVID and how that's impacted them and affects their operations and that kind of stuff. That's what they need.
What are some specific reasons why they need it?
Well, because a lot of folks have been blindsided. They're blindsided by this business shutdown kind of thing, and they've had to retool their model a little bit. They've had to deal with a more remote. They've had to, the construction trade is still, it's going gangbusters and booming out there. But even then, they've had their challenges because of, projects have been held up and that kind of stuff. The financial sector is still, especially residential lending, is booming. And commercials a little bit up and down. The money's available, but they're just not, able to move forward on projects. But, it's kind of like when the world got paused and shut down, everything kind of backed up for a lot of industries. So, it's like it's cost people money. It's cost people reallocation of time on having to deal with these kind of things. And so, and that's what I was talking to my consultant yesterday about the captive thing. And, he says that's where a lot of folks have had to, they've had more claims on coronavirus related shutdown issues than ever before, in potential loss of revenues from stuff. So, I mean, there's the operations that the people are focusing on it, but they've had to, had to recalibrate, so to speak. So, I mean, from the captive side, there's some really good opportunities there if they will talk to us about that side of the business on how it's affected their business and what happens with the next situation that could smack them in the face. So they prepared for it. From the risk side, it hasn't really affected them other than that too much, other than they can't turn in a covered loss of revenue expense, that kind of thing. And for some business, especially the restaurant businesses, that's been pretty critical. They've lost a lot of money. Insurance rates are starting to go up on commercial auto side pretty substantially. They're going up a little bit on property and GL, but it's just a matter of when you've been smacked in the face by something fairly major, it's not a bad time to let's look at the whole package and see what other chinks in the armor is. There's potential other leakage in our programs.
From the standpoint of business, isn't it even more important when there's turmoil like this to get a second opinion, or at least have a review by someone who's in risk management to really understand, where do you go from here?
Yes. You really need somebody to kind of look at it, give it an overall view, and not just look at, we call it silos in this business a little bit. And the larger the company, the more silos. They're essentially operating divisions, but everybody gets focused within their area, and you've got to cross. Even small companies have many silos within them, many divisions, and it's up to the CEO or the president or whoever to coordinate and steer the ship, so to speak. But if he's not coordinating across the silos, so if Susie's silo is having an issue over in getting parts in for manufacturing or repair or whatever they're doing to keep the operation going, and they're focusing on that, but then on the other side maybe there's some slowdowns or some other things that they're not paying attention to, and Susie doesn't necessarily handshake with Billy on one of the other silos in the operation, like AR, or maybe they're not getting money in, and they're running a pretty heavy AR. And of course, that's going to affect their payables at some point too. That's going to slow it down. Even when things are busy, and especially in construction, a lot of business, they pay late, a lot of these folks, because they're getting backed up. So you've got to look across the silos within a company, determine, where their risk areas are. And if they did have a catastrophic loss within the company, it's going to, you got to make sure that's covered, and whether or not, and that their out-of-pocket expense is not going to be substantial. And, a shutdown or another thing with this coronavirus or any other issue could, just back companies up. So it's just good to look across the silos, whether it's a big company or a small company, just to make sure that they're coordinating and everybody's talking together.
I think that's the benefit of having somebody from the outside take a look and really explore how many people don't look at risk across the board. They often look at it as, I've got an insurance policy, and my insurance advisor, my agent, is the one that takes care of me. They're only looking at kind of that small segment of insurance and what the insurance actually covers, as opposed to the other risks that they might encounter. Is that?
Yeah, it's like I got a prospective client. Sorry to interrupt you, but I've only got a very small piece of their risk. I've got their workers' comp, and they're located out of Canada of all places, and they work with dehumidification systems in supermarkets. They've got a general liability policy, and I'm trying to get the CFO up there to allow me to review it. And I've talked to her about her business, trying to learn about her business, where they're going, what they're doing now, what their challenges are, et cetera, et cetera. And it was pretty relevant to do that. They're expanding into Mexico, which is risky. And when you bring that up, that has some repercussions on the GL. So I'm asking her, I said, hey, at least send me a copy of the GL. If you don't want me to quote it, that's fine. Just let me look at the exclusions and limitations on the policy. Let's see and that's what people don't understand. You got to look at the fine print, because that's where you could potentially have a loss. And not enough of the agents, when they rock their clients to sleep, they don't look at those factors. They know they pay $50,000 a year or whatever in premium, but what does it mean if you ever have a claim and they've never really had an incident? But that's what I told her. Send me the exclusion limitations on the policy. I don't care about the price. The price is irrelevant. Let's make sure that you don't have holes in it. But people don't, and she hadn't done it. And, she's rocked. I won't say she's rocked to sleep by her person, but, there's some confidence there that, I'm not asking for much, really.
So the worst time to find out about your coverage is when you have a claim. And that's not when you want to learn whether it's covered or not.
Yeah, it could be any claim. It's like the worst time to find out that you don't have your reserve set up properly. It could be an operational loss because somebody in the company screws up, makes an error in a mission, and costs you money. Well, or somebody's been embezzling funds for years and years. Well, you may have a little insurance for that, but do you want to turn in, $150,000 or $250,000 or $1 million embezzlement claim? Not necessarily. You may have $100,000 in insurance, maybe give you a little bit, but it hits your loss record. You've got to evaluate that kind of stuff where you could be leakage. And if you're not reserved properly, I'll tell you what, I just was going on the internet the other day, Steve, and it was a prospective client I've been calling on a couple of years. And I will name it because it was in the media. It was called JT Alexander Oil Company. And they had a situation out there where they had a cyber loss of $800,000. $800,000. And EMC, the insurance company, they were looking at exploring in coverage. This was May of last year. And I emailed my contact to say, hey, I hate to heard about this, but how do you recoup 800 grand off the bottom line? It's your point exactly, Steve.
Significant. And that's another great example, Steve, that component of do it before it's too late, as opposed to, after the claim has already happened, because there's not a lot you can do after the claim has happened other than kind of help them look forward to the future and maybe mitigate future losses. But the better way to go is mitigate that, or at least be aware of those exposures and the risks before they actually occur.
It comes down to it, losses within the business can be really critical if you have a key employee that's embezzling, or if you lose a key employee, and guess what, you lose with them, especially if they're a key general manager or sales, you could potentially lose key customers too. How do you prepare for that? I mean, you need to look at that kind of stuff.
Yep.
That's
absolutely.
not insurance 101. That's a little bit more advanced stuff, but it's more, hey, let's look at operational risk versus just casualty risk, or having auto on the road or something like that.
Yeah, I think those are really a couple of good examples, Steve, that embezzlement piece, but also losing a key employee. What are some other risks that you think a lot of business owners, especially maybe medium and larger business owners, don't always think about when it comes to risk management and things that maybe are in their blind spot?
I would say if they've got, a physical plant location and they're busy, especially a retail op or, a lot of moving parts and things like that. A lot of them, and they've got forklifts or they've got, lots of people moving within the area, potential customers to employees or whatever. And what kind of gets swept under the rug at times, no pun intended, is the housekeeping issues and the way that people are segregated from the equipment or whatever. So that kind of stuff can happen, especially in a busy. If you were going to Home Depot or a Lowe's or someplace like that, they're pretty good about it. You got a lot of people moving around, but they do keep everything fairly segregated. But once in a while you run into something where maybe a ladder's here or some is blocking your path and you have to go around it. But for the most part, those are things that the good companies really look at closely. But a lot of them, the premise liability, we call it the premise liability, the issues around the housekeeping. That's something people they sweep under the rug.
And that's a really good example. I was in one of those large stores a while back, and the item I needed was right behind one of those big ladders that was kind of in the middle of that section. And I'm looking around, and there is nobody around to help move that ladder out of the way. And so, as a silly customer, I climbed up onto it, grabbed a hold of what I need. I mean, I needed to get what I needed. I didn't want to wait
Yeah,
around and call customer service and wait for 20 minutes for somebody to come and move a ladder. I did what a foolish individual would do that could have caused an accident, but they've got to have processes in place to not just leave stuff around so that
yeah,
customers, they need to understand customers need to get to shelves. And if you've got something blocking that shelf, they're not making any sales, but they're also potentially adding exposure because
yeah.
somebody like me might be climbing up on the ladder to grab something when they shouldn't be allowed to.
Well, a lot of times it's contractors they bring in too that are doing some work there for them or whatever, and they're not paying attention to what they're doing. That's one thing you'll see in busy settings is you got to pay attention to what's going on. I'll give you a funny example. It happened to me many years ago, but I went into one of like a PetSmart or someplace like that. I'm sure you've been into one. Well, I was walking through PetSmart, and you bring your dogs in there, right? Well, you
Right.
bring your dogs in Lowe's or whatever. Well, if you have a dog that suddenly has to do his business, he does his business. Well, what if you don't know he did his business and you're walking forward or you weren't paying attention? That happened, and I'm walking along, and all of a sudden I stepped in something, and it could have been almost like a supermarket issue. I'll tell you about that, where I stepped on I stepped in the duty, about lost my footing. And,
Wow.
I could have fallen and hurt myself. And a similar thing happened at a food line where back after my hip surgery, somebody had dropped a yogurt and it splattered on the floor. Well, I'm looking ahead. I'm not paying attention. I'm leaning on my cart, and had this hip surgery about a month or two before. And I'm leaning on the cart, thank goodness. I step on this thing and I about lost all my footing. And right there, boom, and I pointed it out to somebody there to clean it up. And fortunately, I could lean on the cart. But I mean, that's the kind of stuff, flips and falls. Honestly, it could be that smart.
So, as a risk manager, do you think a lot of companies, well, I'm sure the bigger ones do, but you think a lot of the smaller companies have processes in place to make sure that floors are clean, housekeeping is done, or where do they drop the ball on that?
No, not probably not. That's really up to ownership, uh, especially when I was in the auto aftermarket side. And you had a lot of garages and shops. Now, employees are pretty much delineated to certain areas, but as you well know, people like to go strolling in the garages, bays, and stuff like that. And the housekeeping can be abhorrent during certain parts of the day. And seldom do they put chains up and rope it off or preach to their people on a regular basis. Hey, clean up after yourself. So
Right.
a tidy shop is a sign of a tidy mind, so to speak. But no, it comes from the top down. So if it's like my wife is always after me about cleaning up, and it's not for hazard reasons. It's just because she's a neat freak. But if she would be a perfect risk manager, or in a store environment or whatever, a garage or whatever. She would have that place spit spat all the time, and indirectly would result in less potential exposures.
And that's a really good point, because I believe they're losing customers also by not having a clean store and somebody that really is paying attention to those details.
Yeah, well, certainly, like if you were going to a convenience store, it's hard to find carriers that write convenience stores. Why? With gas stations and stuff, because it's like a beehive. People moving back and forth, going back and forth to the pump, going into the stores, and these people at the counters get busy and distracted.
Right.
And, if something happens in there, and then you got, it's like, I've got one really good customer, Swan, and overall, I think he does a good job. But we had a loss prevention company go out from State Auto, and man, are they just pounding this guy with stuff. And hopefully it's paying off. But, it's so easy to overlook or to ignore issues within stores, because it's like, you want to make money, you don't want to stop and do things to contain risk. It's like,
yeah,
full speed ahead, baby.
And that person that's behind the counter, or those people that are doing the cash register, they can't always see all the aisles to know whether there's stuff on the floor. And they don't routinely just walk through there. Maybe some of the better ones do routinely walk through there, but like you said, they're busy. It's a beehive. They've got lots of things going on. They've got lines of people they got to take care of. They can't just say, "Hey, excuse me, I'm going to walk the aisles while you wait in line for the." They're going to take care of customers.
Yeah, another challenge in the business is making sure that your employees are polite and talking to customers properly, and that you don't have these bad apples out there. Maybe that, especially ones, and I've preached this on phone calls and things. If you're sending guys out to do work at people's homes, and some guy is making snide remarks or sexual innuendos to females, homeowners and things like that, thinking it's harmless, that they're really opening themselves up for complaints and that kind of thing, especially at work. So we've covered, those are just a couple, 3 things that people got to pay attention. Business owners have to pay attention to, not just driving revenues.
Let's talk more about kind of manufacturing. What are some of the manufacturing risks that you've sometimes seen in examples, or risk management that you pointed out to different folks? You have some examples of things that sometimes they don't think about in a factory floor? Like
a machining op, that kind of thing. It's in there again, we were talking about a minute ago. It's the housekeeping. It's the anything with like dust or fumes or metal shards or things like that. Any I said machining, but it could be woodworking. It could be spraying, overspraying, or anything like that. If you don't have the proper controls in there, and they're not wearing proper protective ventilators, and they're not up to date and that kind of thing, or their people are lax with them, or lax with their housekeeping. Those are the kind of times when you're going to have problems. And you have the biggest issue that you're running in any manufacturing, there's a lot of hands-on stuff, is if people ever have to, if they're working with machinery, that they don't use their hands necessarily to clear a jam or something like that. They may be able to safely do it, but if there was a power surge or something like that while they're doing it, and that machine turns on, you're going to lose a finger or whatever. So it's a lot of times, believe it or not, it's not the new people coming in an organization that are just learning, because they're kind of like, new people are like nervous, and they're going to be worried about everything, and they're going to be pretty diligent if you think about it, other than just stuff they haven't been taught, and that's not their fault. But it's like employees have been doing the same thing year after year after year. Sometimes they just get lax, or they get tired, or they're not thinking, and they do it. Repetition is great, but sometimes you can get slack. So that's the kind of thing, is just keeping people on their toes and making sure that they're always thinking about safety.
How much of an impact do you think safety education has in those type situations?
It's huge. It's huge. I've been to safety seminars, and Clyde A. Short does a great job on them with those things. But if safety is not preached repetitively, and you have potential OSHA issues and claims, that kind of thing, it just reverberates, and can cause, their workers' comp modification to skyrocket, can create attitude issues, especially if, certain people are doing certain things that maybe the supervisor doesn't know about or does know about. It's playing preferential treatment. It creates, morale issues. And that's why a lot, we've got it, and within our organization, we've got it available that we'll go interview employees on site and say, hey, look, Mr. Business Owner, there's a lot of stuff that may go on out there in your plan or in your area that you don't know about. And you may want to, we have an objective interview process with the employees to talk about, what's going on in their world. And they tell us, and we don't take names and things like that. And then we bring it back to your attention. And that's a lot of people, unless you've got a really good rapport with employees, a lot of them will hide stuff, or they're afraid to rat on their fellow employee kind of thing for stuff. And so it's important to have great communication out there, because it only takes one major incident to cause major ripples.
Yeah, and I could definitely see how an outside vendor or an outside force would be much more approachable for an employee than, let's say, the boss, especially if that, sometimes a boss is just somebody that likes to get things done, doesn't necessarily build a close relationship with all their folks. Sometimes they do, but they're still intimidated to come to their boss with safety questions because they, like you said, they don't want to rat on their friends, but they also don't want to upset the boss about something going on. So they want to keep things even. And
well, through the Trusted Risk Advisor program that I just completed, they did this Hell's Kitchen episode.
Oh, yeah?
I think it was Hell's Kitchen, but it was called Hotel from Hell or something. It was the same guy from Hell's Kitchen. And what he did is he would go into like hotel environments, and and he would go in and interview each employee. And this was kind of demonstrative of how the process worked. And he would interview, kitchen staff, kitchen managers, front desk staff, all this stuff, HR, all across the board. And it turns out the owner, he had his designs for the organization. He bought this restaurant, and he had designs, or it was a hotel, sorry. He had designs for the hotel, but his designs weren't functional. It was causing grief for everybody, and they were just like, we can't work in this. And so eventually you had to throw cold water on that owner and say, look, this thing ain't going to work, especially under the circumstances. You're an autocrat, and people are not happy. And he totally changed it around, and it's functional now.
And
but it's tough to do it, to want to do it.
And that's all about making the owner sometimes aware. It's just oftentimes just an awareness piece, because they're busy, whether it's an owner or GM or whatever, they're busy trying to get things done, and they're putting processes in place that they think will work. But without that open communication, like you talked about, or the trust factor, people aren't going to be willing to share with you and say, this isn't working because of these 6 factors. Our operation can't work this way. So an independent folks like yourself, a risk advisor, can come in and give them some of that third-party advice that maybe their employees wouldn't necessarily give them.
Exactly. And for the most part, they're probably doing a pretty good job. I mean, but if you can find out one potential issue, like, oh, okay, John Doe is out there taking a smoke break, and he goes out the back exit door and props it open and forgets to lock it and shut it and lock it. Well, that's, potentially burglar situation or whatever. But, employees see that kind of stuff, and they don't, it's a hazard. Will they report that? Probably not. But they may say something to a third party like, hey, we've observed this happen, and it's just something you may want to look at. And management say, I didn't know that. Well, they do now.
Yeah, absolutely.
I'd just say emphasize, slow down a little bit. Obviously delegate, owners should delegate and trust their people, but take some time on an interval basis every year or so to sit down and at least do a more thorough evaluation of their risk program. It's important. Not every 5 years, not every 3 years, at least a Q&A every year, maybe every 6 months. Just really depends on the complexity of the operation. Because I mean, it's like sometimes you don't know what you don't know, and it's just important to make it more relevant or part of your discipline.
All good points, Steve. I appreciate you sharing that with us, because I know your listeners are going to want to pay close attention to what you say. As a certified risk advisor, is that your title? What's the certification you went through recently?
Certified insurance counselor, charter life underwriter, trusted risk advisor.
Trusted risk advisor was the one I was thinking of, because that was the one.
That's the one through Independent Agents of North Carolina. It's certified through that. It's certified through independent agents, I believe, in Colorado and a couple of other states. It's relatively new. It was designed by a guy named Scott Addis out of Pennsylvania, out of Philadelphia, and they cover everything